Hey YouTube, this is Zach with Achilles Financial. Today we're going to be talking about DraftKings. So DraftKings was one of the few stocks on the market that ended the day green this past Friday. And we actually saw a number of post-SPAC names, companies that had gone public via SPAC, actually ended green this past Friday. A few others that I would look at or highlight, key being STEM. So what are some of the things that are causing DraftKings to stay up and green on the past 2 weeks where we've actually seen a lot of weakness in the broader market? Well, the first thing that I would highlight is about 3 weeks ago, DraftKings announced that they were going through a merger with Golden Nugget Gaming. Since then, the stock has actually risen quite some amount. You can see from mid-August where they were trading at around $52 to $53 a share. They now crested 65, and they did experience some of that market weakness before settling around a closing price Friday of about $60.42. So we can obviously see that investors took that kindly. The other thing that I would highlight is one thing that a lot of people are seeing this fall is there is huge interest in NFL football. So since DraftKings is one of the key leaders in the sportsbook world, in the betting world, their app has seen a significant amount of downloads, and they continue to point to their strength in the sector. We're going to expect to continue to see some of this strength. Now, one of the concerns is if we begin to see some form of market sell-off, you are going to see some of these high-flying companies that are trading at very high valuations. You can see a price-to-sales ratio of nearly 23 and a price-to-book ratio of nearly 22. They do not have a price-to-earnings ratio because they are currently not profitable. So the question is, and this is what we're going to be looking at for their next series of earnings, is this revenue growth that we're expected to see right here. You can see the trailing 12 months. So over the past 12 months, their revenue growth is nearly 200%, which is absolutely ridiculous. And there's a number of key items that I'd expect we could see this to continue. So the Q3 earnings, which are actually going to be coming in on November 11th, is where they're expected to be at this point in time. The expectation is that their Q3, which encompasses the entirety of the start of football season, you would expect to be very, very strong. Now, we are also seeing a significant amount of sales effort, marketing effort. That means that I don't expect them to have a huge beat, if a beat at all, on the EPS side. So what people are going to be looking at is, yes, we all know that they are going to continue to blow through money. I mean, they're spending more than $1 billion a year right now, or losing more than $1 billion a year. So that is not going to be a surprise. The question is going to be, are they growing revenue at the expectation that they've asserted thus far? Are they going to continue to be able to bring in the sales growth that we've been seeing? Because right now, if we look at the fundamentals, particularly on the income statement, let's look at the annual basis. You can see that this growth is staggering. So beginning in 2018, you can see total revenue of $226 million. And now you can see that revenue in 2020 was $615 million. However, we can go a little bit more in depth and see that just the first 2 quarters alone, you're seeing nearly or more than $600 million in revenue. So the expectation is that year over year, we expect to see another 100% increase. So the question is, how is DraftKings going to be able to really move that stock price upwards from where we are right now at that $60 mark? I think there's a few key things, and not all of them is within their control. The first thing is, last week we did see, or 2 weeks ago, we did see that DraftKings is one of the states that is able to enter the Arizona sports betting market. This becomes the 14th state to legalize online gambling, and DraftKings is involved in all of them. So if we continue to see more states begin to legalize online gambling, you can expect that to have a positive effect on the stock price. The question is it just going to be DraftKings that is going to be able to feel that, or are we going to see new entrants to the market or some of the other competitors join up and grow as well? The other thing that I would highlight is going to be the Golden Nugget acquisition, and see how is that going to impact their overall profitability as well as their sales growth. So let's actually go and look at that presentation to close us out. So this is the appendix section of their acquisition presentation that they utilized when they originally announced it. And their expectation, or what they're showcasing, is for each 5% of incremental iGaming market share, they expect to bring in an additional $675 million in total revenue. So that doesn't include any of the expenses associated with it, which up to this point in time has been very expensive. But the expectation here is, hey, we think that this is going to bring in another $3.5 billion if we're able to go out and grab another 25% of this market compared to with what we're originally expecting. And the way that they expect to do that is to leverage the capabilities of the Golden Nugget team. So you can see they already have a presence in a number of casinos around the United States, but the also expectation is that they're already going to be present in a number of upscale and casual restaurants. So it'll be interesting to see, are they able to transform a lot of these capabilities, a lot of these expectations into results, and can they do so profitably? I do think that we are going to continue to see DraftKings operate at negative income for the immediate future because that's what they've said they expect to do. The question is, are they going to be able to expand and be able to become profitable within their stated timeline, which is in the next 3 years? So we'll continue to watch that. It'll be interesting. I think that there's a lot of capabilities to see DraftKings stock move higher. I do worry about the overall market conditions, and I think that they could be suspected at due to their high valuation, but the company itself has a solid game plan, and they've been executing thus far. I'd just like to see some profitability with that as well. But that's just my opinion. I'm by no means a financial advisor. I'm just some guy on YouTube. And if you found this guy on YouTube's video helpful, please let me know by leaving a like or comment down below. And if you want to talk about it more, feel free to join the Discord in the description down below. Thanks for watching. Talk to you later.